Hello everyone and welcome back. My name is Greg Furman and this is the VantagePoint AI Market Outlook for the week of December the 23rd, 2019. Now, to get started this week, we're going to begin where we always do with that very important US dollar. Now, once again, as I had stated in last week's Forex Weekly Look, that the dollar is likely to strengthen towards the end of the week. Again, that has come to fruition, but the dollar is not necessarily out of the woods here. We've got some verified resistance at or about the 97.40 that has proven to be very, very stiff resistance. But once again, we can see a false break on the downside, but that was not enough to trick the indicators in the VantagePoint software. Our medium term crossing our long-term predicted difference clearly warned us that the dollar was getting ready to strengthen. Now we pushed lower, again, based around some of the nonsense going on in the US with the impeachment and all this stuff. Of course, that's very unlikely that the current US president is going to be impeached, and the equity markets are a clear sign of that, basically accelerating above the 3,200 mark. So when I'm looking at this right now, our medium term crossing our long term predicted difference, we've got our MACD crossing and our RSI above 50, but more importantly breaking above 60, pointing towards further dollar strength. But again, when we look at this from VantagePoint, we can see that whenever our medium term trend is weakening against our longer term trend, that is indicative of a price reversal. When we look at the monthly cycles in the dollar, again, towards the end of the month and the first week of the new month, the dollar is usually strong. Now, what I am seeing as a bit of a surprise is that gold is stubborn. It's holding on to its gains, holding above the T-cross long, 1478. Now, again, it's unlikely that gold is going to advance next week or in the remainder of 2019. We'll reassess gold as we go into the new year. This will be the final presentation for the year. And again, we want to look at this very closely and say, okay, the dollar is strengthening, the equity markets are good, so gold is not necessarily going to sell off, but I don't think it's going to advance either. The indicators from VantagePoint are starting to turn lower, so I would look for, again, shorts are reasonable, but we want to let that come up towards the 1491 area. Now, again, looking at the S&P 500, VantagePoint did a very, very good job on the call. You've probably heard numerous analysts out there saying the S&P 500 was going to sell off to February and other things along that line. That did not come to fruition at all. We hit the verified zone as identified in the VantagePoint software at 3066. Our indicators were still pointing higher. We advanced. We've had multiple retracements. Again, back down to that exact same level almost at 3072, where most market analysts said we were going to move lower until like February. The exact opposite has happened. This is why when we're using intermarket analysis based software, looking at the correlation to 31 other markets, we usually have a very different viewpoint than what you'll hear on TV or see in some of these websites. So for now, and for going into year end, we're looking for the S&P 500 to hold above 3164. As long as we're holding above that level, then again, the primary trend is still up. Now, our medium term crossing our long term predicted difference to the downside does suggest a move lower, but that is likely only corrective in nature at this particular time. Now, with that likely corrective move lower on the equity markets, I don't think we're going to sell off in the equity markets. We're just going to correct lower. We can see that oil, again, a leading indicator, it's starting to turn lower. Our medium term crossing our long term predicted difference. The neural index is just now in agreement. That is signaling lower oil prices going into year end here, or the probability. Now, you can see the RSI is pointing down. We never ever want to trade off of this kind of a signal. Overbought, oversold, accumulation, distribution. Very seldomly is this type of a signal accurate. We need something more concrete to confirm shorts. So when I look at this, I'm seeing I've got some verified resistance up here as we've moved into this red zone identified in the VantagePoint software. Medium term crosses the long term trend to the downside, and our neural index is now in agreement with a falling RSI. This is warning that oil is likely getting ready to go lower. Now, As we move into our main Forex pairs going into next week, we're certainly, I don't think we're going to see a lot of volatility in the Forex market going into year end. Again, liquidity usually dries right up. But again, as I warned in last week's weekly outlook, that the euro needed to get back up above 112, and if it can't, it is probably going lower. Once again, our medium term crossing our long term predicted difference, pointing that as the euro was moving higher, the price may not be what it appears to be. And once again, this is the advantage of using the VantagePoint AI and taking the correlation of those 31 other markets, and of course measuring two trends against each other, a medium term and a longer term. This warned us that we were moving lower. That's come to fruition, but the euro also still has very formidable support coming in at 110.40. I do anticipate 110.40 will be tested earlier in the week, and we may even be able to accelerate down back into the 109.81. But the one thing you want to take notice here, guys, the euro is not trending up or trending down. It is locked within a well-defined range by these verified zones. So we've come up, tested the top part of that zone. It's the normal course of action would be then to come down and test the lower part of the range, and that's being confirmed again by those VantagePoint indicators. Now, as we look at opportunity going into next week, we've got the US Swiss franc. We can see that again, we've got a classic bear trap that's set up in here. But once again, the medium term crossing the long term predicted difference, when we get that in combination with the neural index, it's very seldomly wrong. I think currently around 80 to 86% accurate. So that is a buy signal forming there. Our MACD is starting to turn higher. We've got a rising RSI that was able to break above the 50 level. So once we break above 60 on the RSI, you're likely going to see this pair accelerate back towards at least the VantagePoint T cross long, which is at 98.62. Now, if we can clear that level, that would open the door to a test to the most recent verified resistance zone, and that area, of course, is at 99.17. So a very strong possibility we can get to that level in the next few weeks. Now, as we look at pound dollar, there's certainly no love for the pound dollar here. The Conservatives won the election in the UK, but now old Boris here, he has the very difficult task of, again, which a number of these articles have pointed out accurately, he has to come up with a trade deal with the European Union within 1 year of January 1st. That is a very difficult task. So the pound feeling the heat here, but again, we've got solid verified support down here around the 128.27 area. I would watch this area very closely. But again, when we're looking at our medium term crossing our long term predicted difference with our neural index, very accurately called this move lower. But again, I'm not overly convinced that we're going to see a lot more selling from this particular point forward. So watch the levels between 130.51 and again this lower verified zone at 128.27. Now, as we look at the dollar yen going into next week, we simply could not penetrate these VantagePoint verified resistance zones. The power of these zones simply do not lie. They look at price action, they gauge the market, and they measure whether there's enough strength to push through. So the fact that we've tested this thing 1, 2, 3, 4, 5, 6 times, it tells me that we're going to correct lower, but it's not convincing me that the trend is going to reverse. I fully expect the equity markets to correct lower. That would mean dollar yen would correct lower, but once that correction is finished, we're likely to see them both go higher. So we're going to watch this particular area right now next week of 109.14. If we can hold above 109.14, then that means the S&P 500 is likely to continue its advance, and the dollar yen and pairs like US Swiss franc will follow. But if we have a big sell-off in the S&P, dollar yen and US Swiss franc will both move lower. So watch our main levels, but we do have a makeshift sell signal trying to form on this pink line crossing over the blue line. The neural index is already ahead of that, but the MACD is saying, look, we still may have some upside here, and the RSI is holding firm. Now, with the Aussie US and New Zealand US next week, very little has changed. But what we can start to see here is that the market has sold off this verified zone near the 69.30 area, come down, stopped exactly on the T-cross long that's identified as a major pivot area in the VantagePoint software, hit that level, and then bounced off it, and we're advancing past that. So it didn't just bounce off this level once here, guys. It hit that to the number 3 days in a row, and then it accelerated. So it does look like we have more strength in the Aussie currency, but again, we've got very significant resistance above the 69 level, so be very, very cautious up there. When we look at New Zealand, we see a very similar picture. Resistance is formed now as identified by the VantagePoint AI. We've put a signal across here and a verified zone. That high coming in at 66.35. This pair must break above this area before, in my respectful opinion, the end of the first week of January, or else it's heading lower yet again. So when I look at the indicators, our medium term crossing our long term predicted difference, the neural index is currently not in agreement, and that's the benefit of combining these powerful indicators to make sure we're not jumping into something without checking all of our different indicators for confirmation. So right now we would be looking for the market. If we click on our F8 in our VantagePoint software, you can see that we're hugging the blue line, the long predicted 65.88. We've managed to close above there, but just barely. So if we're breaking down below 65.88, that could trigger a reversal, not just in New Zealand US, but also in Aussie US. So with that said, this is the VantagePoint AI Market Outlook for the week of December the 23rd, 2019.